Well, Rohit Srivastava is with us, founder and strategist at IndiaCharts.com. Rohit, good morning. Good to have you with us here. Thank you very much for joining us bright and early, Rohit. So good to see you. Rohit, so the question is, big reversal yesterday, big FI sell number as well. How much should we read into it in terms of taking forward, what happened yesterday as the beginning of something sinister, or you think we should just kind of ignore it as a one-day aberration and look at things more constructively? What happened yesterday, if you have any data, etc., and then road ahead? Go on.
So, yesterday was the monthly expiry, and usually on that day, we do see very big FII, DII numbers. So we can't really look at that number and take a call. And even if we go a little broader, we know that when there was FII signing and the market was going up, we were giving all the credit to domestic institutions for their buying. So really, when the market is down, to give all the credit to FIs for their selling is probably not the right approach to analyzing this market. Otherwise, you would get it completely wrong. So what we end up doing is looking at sentiment, looking at positioning, and what is really happening to understand this market. But one thing that I'll say, one conclusion that we are coming to is that we are not done with as far as the correction is concerned. Having said that, no market is going to fall one way. And I think after a 2-month fall, we were attempting a bounce back. And I'm not sure that bounce back is over. It's probably still got some legs to go. And this is seasonally a better period than September and October. So September, October, because of the seasonality also, we were expecting a pullback. We got much more in India than we got in global markets. Now, usually this is the year end where you typically get some improvement in markets. And that's, I think, the setup. Yesterday's fall does go below the 20-day average, but still above retracements, even though it's filled the election gap. We can still call it potential higher low in development once we get it. Either it's done yesterday on the expiry day, or worst case scenario, if it does dip, then we'll keep it open till 61% retracement, which is a little lower. But I think we should be headed up to around 24,770 which is a minimum, and possibly closer to 25,000 overall in a counter trend bounce. So I'm saying it is a counter trend bounce. We may eventually see selling pressure again build up as we go into Jan, Feb, March, because again, that is another seasonally weak period for markets typically. And so I'm not really looking at a new high, but it could happen in individual stocks. The mid and small cap indices have held up better than the Nifty itself. So that does raise the possibility that they do still do better for the time being. But again, on the Nifty itself, we don't see new highs. So that is the big divergence in the overall setup, which means that eventually we may even go below 23,300, but not right now, not right away. Right now, I think for traders at least, or in the short term, we should be looking at going higher from here and not lower. Another data point, as you said, supporting this, a couple of data points, in fact, are the shorts that have built up, right? There's a lot of shorting in this market that is going on. And we've seen that in the FII positioning that you were talking about. We saw some short covering yesterday, but it's still a meaningful short position out there. So it's not completely reduced in the market. In fact, out of stocks, one of the interesting reads which I put out yesterday is actually on Reliance Industries. Reliance Industries has the potentially highest short. I say potentially because we are, of course, looking at only open interest data.
Rohit, we'll just come to Reliance in just a bit. Yeah. I want to just wrap up the Nifty point. So you're saying, so the path of travel in the very near term is higher. Just to make that clear. Probably it's higher, right? 24,770 and then 25,000 in a counter trend bounce. But you're also raising the possibility that maybe the correction itself from the September highs is not fully over and that we'll have to deal with at some point. That's essentially what you're saying, right?
That's right, correct.
Okay, got it.
Okay. Nice. Rohit, hi, morning. Now, I don't remember the year, but I definitely remember that it was one of those Decembers where we thought everybody was going to go on holiday, but they didn't, and there was a fair amount of FPI action and, a lot of volatility and selling as well. I think it was just after COVID or just before COVID. Short point is that I wanted your thoughts on what specifically happened yesterday and whether this cash market selling of 11,000 crores, would you ascribe any separate technical factors beyond the fact that, of course, it was expiry day, and whether there's any way of further guessing as to what lies ahead Because we all wanted to believe that the bulk of this FPI selling is over. It had come down to a trickle in the last couple of sessions, and then bam, you get 12,000 crores sold in one day.
So like I mentioned, we have seen this expiration after expiration that on that day, the FPI selling is always higher than on the other days. And I think it has to do with arbitrage unwinding. See, it's a very simple equation. If you're long stocks and short futures, right? If you have done that kind of a trade, then on the day of expiry, your futures are closing out. And to the extent that you have cash positions open, which you have not been able to hedge into next month futures where you haven't rolled over, you are going to have to square up that extent of position. So that means cash selling always comes in on expiry day. So you can check back, you'll always find the expiry day cash selling by FI is always being higher than normal, going back, for a couple of years also. So that is why the data point that we are looking at yesterday, 11,000 crores, may not be something that you need to look at and get worried about. What we really want to see is what happens today, what happens after expiration and the rollover and square offs have happened. Do you really see continuation of that selling? And do you see the mid and small caps give up? Because if you actually look at the last two very short-term peaks that we saw, one we saw on, say, 15th of October, another we saw on the 6th of November. Both of them, the Nifty was not able to bounce very far. But the mid and small cap indices did go up a lot, and then they started to sell off from there. Yesterday, we haven't really seen selling in the mid and small cap indices. They both closed positive. So unless you see weakness in the broad market, I would think that, it's again a one-off that what we've really seen yesterday. It's not giving us the same behavior that we saw in the last two occasions.
All right. Hi, Rohit. Good morning and good to see you. Ben, so I think consensus is correct. We started the show that's saying that maybe, in fact, that FI selling is not something that we should see. And it appears that, that seems to be your understanding as well. So good to see that. But you were making that point on Reliance, and the open interest surge that we've seen out there. That's been the bear's favorite stock of late. Stock has corrected, underperformed the markets as well. But in the open interest built up, what are you observing and how do you expect things to pan out from here on?
So this is the highest open interest since 2006.
Yes.
And it's been pretty much one way up on the OI chart, even as prices were continuously falling for Reliance Industries. It's been a relentless sell-off, I think, over the last 1.5 months. And what that usually means, because it is an inference, we don't have the long-short breakup. So the inference that we make is that if prices are falling and OI is rising, it's possibly got to do with a lot of short selling. Okay, so it's the inference essentially means that if there's such a big short built up, any kind of reversal in price would result in a lot of short covering. Whether it's just price action or whether it's news-based is something we'll of course have to see. But there's a case that, any turnaround could drive short covering in the stock, and that's something to really watch out for.
All right. So, but do you think that is likely to happen? At around 1,200, 1,220, we've seen the stock bounce off those levels, Reliance Industries. And if that could come to the party, it'll be very, very good news for the bulls' perspective. So we'll keep an eye out on that front. Rohit, a couple of more questions on stock-specific action. You have more to deal with now because you have 45 new F&O stocks that will be coming in there. Any interesting price action that you're looking at? Zomato has been looking very, very good. Paytm out of nowhere, in fact, has looked good. I've seen this in the past, Rohit, and you will recollect as well. Stocks like Just Dial and all, they came into the F&O market. Everyone thought they're going to run away from there. And from there on, they became the biggest shorting candidates once they came into the F&O market. This time around, any specific stock you're looking at? 45 have been added to the list.
So without really naming a particular stock, what you said is very true, because it's purely psychology, right? We end up recognizing a company based on its past record. And when the record has been good and the stock has done well in terms of performance, we bring it into the futures and options segment, and from there sometimes the performance is not as good as it was in the past. So this has got a lot to do with mass psychology than anything else. Having said that, I'm sure it's not always the case. I mean, in early stages of a bull market, stocks that got included probably did well as well. So where we are in very, very late stages of a move, there's the potential that you have a very different outcome. Now, having said that, if we try to look for winners in this kind of a market, it's not going to be easy, because on days when the market is down, like yesterday, you might find many stocks making new lows and you end up getting caught in that. So this is, I'm again repeating, this is to us still looking like a counter trend bounce. We are not really looking at new highs. That means the chances of getting stuck in stock-specific moves is very, very high, which is why we'll probably not take a stock-specific approach at this point of time. In fact, be more worried about when the next sell-off will come in, and you end up seeing much lower prices. So, very tough call to really take at a stock-specific level.
So a bit more defensive in terms of overall approach to things, and not going all out. So that's an important thing. Counter trend and not trend. And when the overall bigger trend overwhelms, we'll have to see. Two other things. Anything from a global macro? Quick one, Rohit, which is important to track. Anything moving?
So the good part, the good part is that bond yields are probably starting to head lower again as far as the US is concerned. Unfortunately, we don't have the same clarity on Indian interest rate cycle, though bond yields in India also have been slightly off. But the currency, which is USD INR, is so close to an all-time high that I really doubt that the RBI can pull a rate cut on that. So that's where the global setup is. The dollar, though, still remains strong. So we have this contradictory move between a rising dollar, but at the same time, you have rising bonds. That's slightly deflationary, which is what we see in commodity prices, which is why even taking a bet on, say, the metal sector is slightly difficult at this point of time.
All right, Rohit, we'll leave it there for this morning. But great conversation as always. Thank you very much. And I look forward to many more at 8 o'clock. Thank you. Have a good weekend as well.
Yeah, this was nice. Yeah. Count on us to call you again and again, Rohit. But that's really reassuring to you. Reassuring to hear that explanation that this large FPI number is probably only technical in nature because of the expiry, the monthly expiry yesterday. Maybe we don't have to get so worried about it.